Hello again, everyone. In this technical analysis of the stock market video, we're going to take a look at the S&P 500. And I call this video the rising wedge because that is the clear pattern that is jumping out at us here when we look at the S&P, when we look at the Dow, and on the daily chart. That's what we're getting. And we're getting an interesting, very interesting pattern on the weekly chart and on the VIX weekly chart. We're going to take a look at all of that, as well as the put-to-call ratios that I mentioned last week that we continue to get more of this week. And we're going to take a look at gold this week. We looked at oil last week. We're going to look at gold this week. All right, let's start off here with the S&P. Here's that rising wedge pattern that we've got. And it's really, really interesting that that daily pattern is running into what I call this resistance zone up in here, okay? These are the previous highs that occurred October through December. And we're running into that. On Monday, we came right up into it. The high was 28.13. The zone is 2800 to 2817. Okay. And we got up into that, and then we reversed it, got repulsed right on back down. And then Friday, we made another run up into it, and we got as high as 2808. And we closed 2803. So we closed 2803.69. So we closed slightly into it. We're up 19 points on the day on Friday. But you can see on Wednesday, we broke down out of this wedge. Okay, now we kind of just hung here. So the real question is that just a little pullback, kind of kissing the trend line goodbye before we roll over and head on back down? Usually a rising wedge pattern is bearish, and usually you come back down and retrace that wedge fairly quickly. Let's take a look at the weekly chart. Okay, here's a view of the weekly chart. You can see we're up 11 points for the week on the S&P 500. Again, Friday salvaged the week, and I think the same thing happened last week. With the fact that it was up like 19 points on Friday and 11 for the entire week. So kind of interesting that that's going on. But we got this little doji star here. So what jumps out at me because of this, the way it gapped up, and then we had the trading range. We closed right about almost exactly where we opened. That looks like a potential evening star. Now, for this to be an evening star, which is a big reversal pattern from candlestick formations and patterns, we need a down week next week, okay? And preferably a gap down at the open next week. So it'll be interesting to see what kind of trading do we get on Monday, and do we get a down week? And if we do, I think we're putting in that evening star, and it just happens to be right at that resistance zone. So I find that really, really interesting. All right, I also want to take a look at the VIX. Okay, the VIX was down 1.21, closing at 13.57. So here we are back closing right about where we did on February 22nd, where it closed 1351. So we're back down here in the doldrums. But the most interesting aspect of this is looking at the candlestick for the week. Look how we had this reversal candle up here, okay? Kind of I don't know if you'd call that truly a shooting star. I just look at it as a reversal candle. Well, we're getting close to the duplicate of that right down here, okay? And so this is what you call an inverse hammer. And when it occurs at the end of a downtrend like this, this has potential bullish implications, which implies, again, you need follow through. You need it to come this way, but it's like a little flag waving saying, hello, this has potential to say that the downtrend is stopping and we're about to reverse. And that's what I'm watching for on the VIX. And it's kind of interesting that if the VIX is giving us this signal that it's in tune with what we're seeing with a potential top on the S&P at the top of a rising wedge. And let's talk about the put-to-call ratios. Okay, last week I was talking about the put-to-call ratios and how we got, I think I showed this. I'm looking back at my notes. I'm not watching the video actually, but I remember I talked about how now it's getting a yellow. Well, we've had this yellow every day this week. And so what's the yellow? I color code the 10-day moving average of the put-to-call ratio. Again, this is the Chicago Board of Options Exchange equity only put-to-call ratios. These are the actual numbers here. I color code them deep red below 0.55. And then when the 10-day gets below 60.60, I color coded yellow as a kind of a cautionary flag. When and if these get below 0.55, I color code them deep red also. Okay, so this is the picture. This is what's going on. Let's take a look at that. I'm going to go back to the SPX and let me pull it up. And now what I want to do is I want to drop in, highlight, if I can do this, where the yellow is occurring on the 22nd, which I believe is, you know what, I got to, hold on. I got to double check. It won't let me see the date when I'm doing this. I've got to look in here. Right here is the 22nd. So now this is what we're looking at in here. This little section right there is what we're seeing, okay? Okay, let me try this again. So here's what we got with the highlight where the we're getting extreme bullishness kicking in, and then back over in here, September 22nd to October 3rd. Got the same thing, and then prior to that, it was August 28th to September 5th, okay? So this was the area right in here. So these are the last couple of times that we've got that kind of extreme bullishness that's kicking in. Now, can it get more extreme? Yes. Can it continue on for a longer period? Yes. But this is what we've got, and this is the last two times it occurred. Okay, so just for a little bit of added perspective. Okay, that's the picture on the put to call ratios and when they were kicking in on the S&P. Now let's take a look at gold. I want to show you what's going on with that this week. GLD was down $2.11 on Friday. This thing had been getting some pretty heavy duty bearish divergence in here when these three little pushes. It really was starting to look like we were getting to the end of the run, and it refused to break down. But then once we got the three little pushes and the continued divergence showing up, and then we got the close below that 10-day consecutive closes breaking the trend line, pretty big collapse on Friday. I think the futures were down something like $22 an ounce on gold. So that's the picture there. Let's take a look at, this is my preferred wave count. Okay, so right now I'm going with this, and actually what I want to do is just go to the weekly. What I think we're in is a big triangle. Okay, so after the big move down that we had 2011 into December 2015, we had the big reaction back up. You know, I don't believe that was it, mainly because of all the sideways type of activity that we've had going on. So right now, because of the deep movement that we've had pretty high up in here on this, what have got labeled as D in this triangle, I think we've got this triangle forming, which would imply one more wave down for wave E, which would complete this primary wave B, okay, and A, B, C. Okay, triangles and Elliott wave patterns, triangles always form and only form in B waves or fourth waves, okay, of an impulse move. That's why when you're in a reaction, a retracement like this, a corrective pattern like this after an impulse wave to the downside, and we're in a corrective pattern and you get a triangle like this, it's telling you it's a B wave. Then it's just a matter of what kind of pattern are we getting. So right now we're watching this to see how the waves unfold in here. We've had a pretty big move down $3.62 on GLD, but that is the current picture that we've got. And again, things change week to week. I know a lot of people out there sit back and say, well, you know, how come you can't tell me exactly where XYZ is going and where it's going to be in what specific period of time? Well, you know, when I hear that, it really tells me they haven't been in the market very long, because in reality, nobody knows for sure what any given market is going to do tomorrow, next week, next month. What you're doing is you're trying to assess probabilities and the patterns and look to see what the market is telling you. And oh, by the way, what the market's telling you today can be different 1 week from now, 2 weeks from now, etc. I always remember reading that Market Wizards book long time ago, and the interview with Paul Tudor Jones. And when he first interviewed him, he was very bearish. 2 weeks later, he came back. He was very bullish. Well, what changed? The market changed. Okay, so the bottom line is what we're trying to do here. It doesn't matter whether it's gold or whether it's the S&P 500 or whatever. I mean, we're trying to assess what is the market telling us now and what are the probabilities for the path forward. All right, everyone, I hope you found the video helpful. And if you did, give it a thumbs up. And if you're not a subscriber, subscribe. And if you want to get more information on a regular basis, go over to my website, joehenches.net. Check out the membership over there. And everyone have a great weekend and a great week. We'll talk to you on the next video.